Let's get to pro trader Alan Knuckman, the chief market strategist at Paradigm. Hello to you, Alan.
Hello, Angie. The summer fun is over. Now we're into the serious time in the markets. We've been giving back gains here over the last few sessions. It was a big rally last week, up about 5%, gave 4% back on Tuesday alone. So it's been stairs up, elevator down.
What's your trader talk this week, Alan?
All right, it's all about the macro market still. So we want to remember that we've got mostly January options, which is plenty of time. Now that volatility has decreased, these options now are much cheaper in relative terms than they were just weeks and months ago.
Tell us about your new trade, a stock that has gone from around $70 all the way down to $17.
All right, this week's trade trigger, LYFT. We all need a lift. So we've seen some smart money action in this stock. This is a stock that's gone straight down, but made a great bottom base here between 12 and 24. And it's right now stuck at the 17 level, which is about the halfway point. So we'll see if we can make a push back up to the top end of that range. Now, this is a stock that's got a huge gap up above it from 24 to 30. So there's a lot of upside potential here if we can get some short squeezing as per some of our indications right now. So what I'm looking to do here is play this with the January $15 call. Again, $15 is very close to that low, gives us right to be long from 15. That option's trading for about 4. That's $2 or so in the money. But more importantly, it's stock substitution. Plenty of time. January option, 4 full months. And it's got a delta of about 70%, meaning it's going to act like this stock, but it costs a lot less, $400 for this option controlling 100 shares, versus if you bought 100 shares, it's going to cost you $1,700.
What are your trading day takeaways?
All right, trading takeaway number 1, positive barometer. Oil's well. So oil hit $90 here yesterday. So it had a fake out breakdown last week. It had gone from 85 to 95 back down to 85 again and broke to the downside and was making multi-month lows. Now it's come back up very quickly. So that was a failure to push through. And that was a fake out with that indicator of the overall strength of the economy. So I look at that as very much a positive for the markets. Number 2, H2, holding tough. So we're holding again. Now we talked before about 3,900 as the midpoint of the S&P of this bounce from the bottom that we've seen over the last couple of months. That held 2 weeks ago. That held again yesterday. And also the VIX halfway point is held at around the 28 level. So let's watch to see how these levels hold. And that's going to give us a good indication of what's really happening on these pullbacks. And number 3, dollar index. Dollar index had a weekly key reversal last Friday. That's big, made new multi-year highs and had a lower weekly close. That's very destructive for the dollar, technically speaking. So that's something that we need to build on. Now we see a bit of a bounce in the dollar as we're talking about the interest rate hike that's priced in for next week, but we still haven't made new relative highs in that dollar. So let's keep an eye on that. Dollar decline looks for stocks to be higher.
Thank you, Alan.
Thank you.
Go to businessfirstam.com for where to see our show on TV.